Hello, yes, good afternoon, everybody. I hope you can hear my voice and also see my screen clearly. So today's session, I'm going to look at the pin bar strategy. You remember in the past I've looked at a strategy similar to this one before, but today I want us to build on what I looked at. So the first thing I'm going to do is I'm going to define a pin bar. Then we're going to look at ways through which the pin bar can be very profitable, especially if you're attached to a given strategy, not alone. So any candle which looks like this, a candle which has a small body but a relatively long tail on one side, assuming you have a candle like this, you have a candle like this, assuming you have a red candle like this, or you have a candle which looks like this. This is the typical example of what a pin bar should look like. So this is a pin bar. We refer to this as a bearish pin bar. So anytime you have a candle which has a small body but a tail which is longer, relatively the size of the body should go inside the tail at least 3 times. That is, if you measure the size of the tail divided by the size of the body, you find a value which is greater than 3. So that means that's a pin bar. And if the tail is nowhere, if you divide the body does not go inside the tail, that's the tail is very small, the lower tail is very small compared to the size of the body, then this becomes a bearish pin bar. We call it bearish because it has a tail at the top. And what it means is that the buyers try to push price upward, like the price opened here. The buyers pushed price as high as this point, but then it ended up closing somewhere here. Sorry, this is the opening price. I'm sorry. The buyers pushed price as high as this point, but then it ended up closing somewhere here, just close to the low. The same thing here. The price opened here. The buyers pushed price as high as this point, but then it ended up closing here, just close to where the lowest low it hit so far. So this becomes a bearish pin bar. A bullish pin bar is opposite the bearish one, so the color is not significant in this case. So this is a bearish pin bar. This is a bullish pin bar. The one I'm drawing now, this is a bullish pin bar. So we have that. Notice they look almost exactly the same, but the color is different. One thing which makes them the same is that they all mean the same thing. They all imply that the price should continue to the upper side for the bullish pin bar. So anytime you have this combination, anytime you have candles which look like this, just know that the price is heading to the upper side. Anytime you have a candle which has a very long tail at the bottom, a very small body, and a very small tail at the top, this is a bullish pin bar candle. And anytime you have a candle which has a very long tail at the top, a very small body, and a very small tail at the bottom, that's a bearish pin bar candle. So what this candle means is that we are now sellers, and what this candle means is that we are now buyers. So the worst thing you could do is just to enter trades blindly after you see this. It's the worst thing anyone can do. Whenever you see a candle which looks like this, don't just find yourself diving into a buy or into a sell because of this candle here. That you're going to end up wrong at least 80% of the time. So when does this thing become relevant? When does this candle becomes relevant? The answer is very simple. Every candle is significant when it is attached to something else. So every candle So when we have like a candle like this, just selling by the mere fact that we have a pin bar, or buying by the mere fact that we have a pin bar, you'll always end up wrong. So this is why you have to attach this to something else. Attach it to either an active trend or to a key level. So when you have like a key resistance level and then you find something like this happening around the same level, that's a very good sell. But if you have something like this happening around a key support level, that's a very good sign for a buy. That's the time you're supposed to use it for a buy position. The other case is when you have a very good trend, like here we have a very good uptrend. Disregard this indicator here, the one I'm having on the screen. You have a very good uptrend, then you see a bullish pin bar. This is a very good opportunity for a buy. You're supposed to take that buy. You're supposed to pick this buy here. You're supposed to pick this buy. You're supposed to pick this buy. So anything which is pointing upwards in the direction of that trend, you're supposed to pick it based on that trend there. So when you have like a pin bar, the trend is upwards, you pick a buy. We have a pin bar, the trend is upward, we pick a buy. We have a pin bar, the trend is upwards, we pick a buy. The same thing here, and almost the same thing happened here. So that's when a pin bar becomes useful, when it is attached to a trend or when it's attached to a key level. Like look at this. We have a trend line here. So this was a resistance. We have a resistance. You see there's a pin bar. This is like a dynamic resistance level. When you see this, you're supposed to pick the sell immediately this happens. So we pick a sell not just because there is a pin bar, because this pin bar here is around a significant resistance level. This is when a pin bar becomes significant. When it is attached to something significant in the market, then you're free to use it. Does that make sense? So you have to attach a pin bar to an event in the market. So if we have an uptrend event, we have to attach the pin bar to that event. If you have a resistance, you're supposed to attach a pin bar to that resistance. So when we have a resistance trend line here and the pin bar occurs around that area, we pick a buy. The same thing with when we have a resistance trend line like this and a pin bar happens around that resistance trend line, you're supposed to pick a buy position. Does that make sense? Yes. So simply this is what I wanted to indicate. The main thing which I wanted us to look at now, what I wanted us to say today is that don't just enter trades because we have a pin bar. Don't just find yourself picking a sell position because you have a pin bar, or a buy position because you have a pin bar. But pick a trade based on a pin bar because we do have a trend supporting that pin bar. So for a bullish trend, we pick bullish pin bar. For a bearish trend, we pick bearish pin bar. And when you have a resistance and a pin bar happens, that pin bar must be bearish pin bar for a sell and a bullish pin bar along a support level for a buy position. So thank you very much. I know this has been a very brief session, but it is very useful that we understand those concepts, that the fact that we do attach pin bars to events in the market. So we are going to meet again next week at the same time. Thank you and see you.